just going to see the concept of managing asset and liability. What are all the differences are there, and how we can manage and how we can do it in a proper way. We are just going to see each and everything. Okay, so first thing we can go with managing assets. So, what is really managing asset? You know, you need to know where you parked your asset. That's very, very important to manage it in a proper way, because a lot of peoples are losing and a lot of peoples are making mistake on this part where they won't see where they just bought the asset, whether it's high risk or low risk or moderate risk. They won't see anything, so that's where they're stucking in the trap. So in that, I just given the categories of assets. So let's go through that. First one is liquid assets. What are all the liquid asset? So liquid asset is nothing but if you want to buy a product, you can buy quickly or you can buy within one day or as much as possible. So you have some liquidity as a cash or as in a savings account or as in a high yield savings account or even as in having money on money market funds. So if you having these kind of things, what can happen is you can have the proper emergency fund, and you can know what exactly you have in your hand. So these are all the things you can do when you have a liquid assets. But the liquid asset main minus point is your yield would be very, very low if you have your asset in your hand. Like if you have the cash in your hand when you're not buying as an asset, you won't earn any like you won't earn any interest or you won't earn any money from that. So this is the one of the minus point you have when you have a liquid asset. Next one is investment assets. Investments assets are nothing but the stocks, the bonds, the mutual funds, the ETFs, retirement fund, PF. Lot of things are there. So these are all will be considered as investments assets where you will have everything on on online or on paper. You won't have on like a liquid assets like a cash or FD or something like that, so that you can get and you'll get it as a cash very quickly. Like these assets are like if it's like fluctuated, it's not going to stay in one place. Your values are not going to stay at the same place, so these assets can be more and more fluctuate based on the market condition and everything. Okay, so these are all the assets class you need to know if you go with an investment asset. Next one is a real property. Real property is nothing but the asset which is going to carry forward, going to give the rental income or the place where you stay, or it's going to be accumulating the land. Okay, so that's what the home, the rental properties, land, the commercial properties. So these are all will come under the real properties. And next one is business equities, like having a ownership or having a co-partnership with other business or running your own business or buying 20 to 30% share in a big business. So this will be considered as business equity or running your own business. So these all will be considered in this. This is also going to be an asset because you would have a good cash flow inside your business, and the business, if it's growing, then your money is going to come out in a very huge amount of money in as an interest. Next one is personal property. Personal property is nothing but the vehicle, jewelry, clothes, NFTs, like these kind of things are going to be the personal properties where like if you want to sell it, the value will be depreciated. But these are all also will be considered as asset if you are earning something in that. Even in previous videos, I just mentioned very clearly, even your mobile phone can be an asset if it start giving you money in some other way by giving a good quality video as a content creator or anything like that. So if something is going to give you money, that's going to be considered as an asset. Anyway, it's going to be depreciate, but the thing is with that you just earn the ROI within 3 to 4 months. Like whatever that's you just invested on that, you just taken back within 3 to 4 months or 1 year, then it's going to be an asset. Okay, so these are all the things. Next one is intangible asset, where your parents, your loyalties, your customers, your digital assets, sorry, these are all going to be intangible because you're going to earn or you're going to protect or you're going to do something by monetizing it, or you're just going to be like for example, we will be think like loyalty is like a very simple thing. But the thing is, if you get a loyalty from a brand, or if you are like if a customer is trusting you so much, they are going to bring you more sales, they are going to bring you more money. So like that you can keep these kind of intangible, where if one time if you got registered, if one time if you entered into this, like for example copyrights, you like for example a patent, so these things will be coming under the loyalties, where if you done it for one time in lifetime, you are just going to earn a some part of money whomever is going to use your product. Okay, so that's what the thing. So these are all will be coming under asset. In that we have some framework to protect it, to manage it. So first one is inventory. So you need to know what are all things you have. So you need to list out what are all the asset you have. That's very very important. And next one is evaluate. Evaluate is nothing but how much return your asset is giving, how much like you're just giving for maintaining the asset, and how much the asset is riskier, and how much faster you can liquidate your assets. So these are all going to be come under the evaluate session, where you're just going to know what all your assets are capable of. So this is the second one. Third one is optimize, and this one is going to be improving the performance. For example, we will be having 10 to 15 stocks in our portfolio. Suddenly, one stock or two stock, the company won't have a good name, or some collapse will be happen, some bad news will be coming. On that time, if you feel like really this stock is not worthable, you need to balance your portfolio by optimizing it each and every time whenever you notice that it's not good for your portfolio. Because if like it's like if small bleeding is happening, what will happen is, if you're not stopping it, it will infect full portfolio. So always make sure noting down and tracking down what your portfolio is doing, whether it's not performing good, or if any issue is happening, you need to rebalance with eliminating something and adding something which is going to boost your portfolio to the next level. Okay, so this is very very important thing. And the fourth one is grow. Grow is nothing but like for example, yeah, you would be having an SIP on every month. Like you would be having SIP on some asset like equity or something. You're just putting SIP, and if you're putting $100 every month, and if you are just putting it, try to increase your investment, so that what will happen is your growth for longer term would be more compared to the shorter term. So a lot of people will be not noticing this. They will be only focusing on $100, $100 for 5 to 10 years, but the growth would be this growth would be there, but it won't compound very faster. So if you want to see the huge compound in a shorter time period, try to increase your SIP amount, or try to increase your investment capital, so that what will happen is the contribution what you're going to increase will make your portfolio to the next level, or it will increase your portfolio in a very big level. So if you want to get that, then you need to do this. And the fifth one is protect. Protect is nothing but even if you have any kind of asset, for example, even if you're investing on the equity, you should have the proper edging. Edging is very very important. A lot of peoples are losing in they're just blindly investing on one or two stocks, and they're not seeing what exactly it's going to work. Don't do that mistake. For example, if you have if you are choosing like for example, if you're choosing 2 to 3 stocks, try to choose like 4 to 5 as an additional, so that if anything happens for this two, like remaining stocks can help you to balance your portfolio, or it can boost to the next level also, because some scenario it can happen. Some stocks can perform 2 to 3x because of that, but some stocks will be gone to zero or something like that. So because you just balanced with the proper edging, your portfolio would be balanced. So always make sure your asset is having a proper insurance or proper edging, so that you won't get trapped anywhere. Even if you have your house, or even if you have your vehicle, or any kind of sort of things, put some insurance so that it will be protected, because anytime anything can happen. So for avoiding the accidents and avoiding unnecessary trap, you can have proper insurance and proper edging. So this is very very important. So if you know these things, you can manage your assets in a proper way. So now we can come to the next part. And now this one is little bit I just elaborated in a PDF, but let's go deeper into the next part, which is nothing but managing liquidity. Here I just given lot and lot of things like the strategies to protect your asset and everything, but you just go through the PDF so that you will be knowing. So now let's coming to managing liabilities. What is managing liability? So this is the main important thing, guys, because a lot of people are missing out this. They're just running backside of EMI, they're just running backside of debt, and they just like for example, like each and every month I've just seen some people will be buying everything on EMI and they will be working to pay EMI. So that's how they would be. And some scenario what will happen is they would spend more than what they just earned. So like what will happen in that scenario is, for managing that money, they will be getting EMI for some like they will be getting EMI for working on that month, and for balancing the next month they will be getting a new EMI to close the current EMI. So like that they would be they would be stuck in a big trap. So even this is the biggest mistake, don't do that. Okay, in that we can see the list, we can see the liability types where the mortgage debt, student loan, auto loan, credit card debt, and personal loan, medical debt, business loan, tax liability. So these will be coming under the liability list, because these are all going to take out your money from your pocket. So if something you're just going to give from your pocket, then it's going to be considered as liability. Same time, if some product is going to depreciate the value, for example, if you're buying for $100 today, and if it's like depreciating like around 20 to $30 in the next 2 to 1 years, then it's going to be the depreciating asset. It's like going to be the you can consider as a liability. If you're not earning anything with that, then it will be a liability. It's not going to be an asset if you're not earning anything from that. So on that scenario, you should be very careful. You should sell off it in a very quicker time period so that your depreciation would be balanced in some scenario. Okay, I think previous video I just explained about that. So let's see the framework of liabilities. So first one is inventory. As I tell you, inventory is very important. What are all the debt you have, what are all the loans you have, what are all the liability you have, let's just list it out in the inventory. Just list it out as a list and note it down which all things are very important. And you should eliminate one by one. That's very important. That's what the next point is, like classifying. Like for example, you need to know which liability is increasing your wealth. Because like for example, if you take the mortgage debt, or if you take something like education loan, or if you take something like a bike, it's like for example, if you have the bike loan, and if you're like like enrolled in Uber, and if you're earning in a part time, then it's like it's not going to be like liability for you. It will be considered as liability, because if you're buying these kind of bikes and other things, your value will depreciate. But the thing is, like you're just earning money back from what you just got it, so it's going to be the wealth building liability. Okay, so in that scenario, even if you get a home loan, it will be considered as the liability, because it's going to go out from your pocket. But in a longer time period, you're just going to earn a rent, or you're just going to have the land which is going to increase in value in the future. So that and all will be coming under the wealth building liability, where it's not going to destroy your wealth, but some liabilities are there where it will destroy your wealth. For example, which one we can take is even student loan is going to increase your wealth, because if you gain knowledge, you can make your salary into 10 or 20x. So I'm not going to consider that. We can take like many people have seen, when the Apple product is launched at the first day, they will be standing in a queue, they don't know what they're doing, they need to buy it to show off. So don't do that kind of things. That kind of things will destroy your wealth. It's not going to increase your wealth. So these are all the things. And next, third one is priorities, where for example, you need to know one thing. If you are stuck in the EMI or debt, the main problem is bouncing check, or like for example, your salary would be 1 or 2 days later. Because of that, your like EMI would given you a penalty, or some scenario you would be paying a huge interest. That's what the thing we need to note down. For example, if you take a credit card, the interest rate is like around very huge, from 12 to 29% of annual interest. Just imagine, it's not an easy amount. because wealth will create in a slower form where even the huge wealth, huge return is not going to be more than 15 or 80 percentage. If you see the top 10 companies, they're just making profitability year on year around 10 to 15 percentage. Maximum they will go for 20 percentage. In that scenario, if you're going to give 12 to 20 percentage on year from your pocket, then it can destroy your wealth. So you need to be prioritized which is going to be more and more interest. You need to eliminate that first, then you need to go on with the next ones. So that would be a good idea, because a lot of peoples would be like buying lot of things in the same thing. Don't do that mistake. And reduce cost, where like for example, these are all like we discussed previously, so we no need to go out with this. And automation payoff, like automation payoff is like, you need to know one thing. A lot of people are thinking buying Netflix and buying like like subscribing to like all that, like lot of entertainment platforms are there. So what they will do is they will subscribe to that, and they won't they won't cancel it. They would be like running it for a very longer time. So this is the one of the reason you won't even notice that each and every month some money is going outside your wallet. Suddenly, if you notice and if you calculate in the 1 year of longer time period, a huge amount of money would be gone from your wallet by auto subscriptions and auto pay of bills. So always be careful when you're buying subscription models, or if you're buying something, it will drain your wallet. Even this also a liability, because it's not going to gain you anything, it's like going to drain your wallet. So always make sure these are all the things, and these are all the this how you need to manage your liability and asset. If you know it properly, no one can stop you. You can make yourself a very very bigger, and you can you can project yourself very bigger, because many people are lacking on this. They don't know which is liability, which is asset, and they don't know how to manage it properly. Law, like stop getting aggressively getting something on loan each and every month. Like I have noticed this in a lot of plays, and a lot of people are doing this. So don't do that mistake. Like if you're avoiding these small things, no one can stop you. I think this video will be more and more helpful for you. We can see you on the next video.